From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
G'day, welcome to the COB. I'm Nadine Blaney. Wonderful to be here with you on this Monday afternoon. Plenty to discuss. While we do that, let's just take a look at the COB Australia Index. So just time-stamping this for some of our regular podcast listeners. We're just after 4 here in Sydney, and the COB Australia Index has closed up by about 0.25%. So we still do have the last of the day's trades going through the S&P ASX 200. Bit of selling, it looks like, into the close. We've got a mixed picture being painted at this stage in the United States when it comes to the futures market there, with the NASDAQ E-minis slightly weaker and the S&P 500 E-minis slightly stronger. We do have the Hang Seng down just marginally, but many Asian markets were closed for this Monday session as we continue to digest what's next in terms of the macro. And that's macro clearly with the FOMC decision coming later this week, but also when you consider the fact that we've got many of these global central banks meeting, which clearly forms one of our key themes today. We do have the FOMC, we've got the BOE, we've got the BOJ, we've got Norges Bank. And so we will be discussing interest rates in terms of what it means for your portfolios, for your investments throughout the week. And of course, what we've been talking about a lot today are those gold stocks in your portfolio continuing to go from strength to strength in terms of the gold price. And we'll talk to Josh Gilbert about that one a little bit later on. And sector-wise, let's take a look at where some of the weight or strength came from in the banks, mostly contributing to the broader market, although nothing to write home about. Westpac, the real standout, it's up by 2%, but as a whole, this is the meatiest contributor in terms of market weight to the gains that we saw today. So in the gold space, look, it wasn't entirely uniform, but you can see there that Evolution for one looking really good, up by about 4%. Northern Star was up by 1.2% as well. And when it comes to some of those big miners, the BHPs and the Rios of the world, you can see they're coming under pressure. We did have that data in China coming in weaker than expected. I was reading a note from the Commonwealth Bank earlier this morning. Vivek Dar, great analyst there, he was saying that he reckons if we see weakness in the same set of data in September, that that will be enough to sort of spur the authorities, the powers that be there, so to speak, to come with some further infrastructure and some more significant infrastructure spending. So that big bang stimulus, I suppose, in China to get things going. Of course, it remains to be seen. Andrew Swan from ManGLG joined us today. You can find that interview online, ausbiz.com.au. He talked about China really being on the cusp of a potential policy change, but pointing out that social reform is really top of mind when it comes to the Chinese authorities. Think cohesion within the society with unemployment amongst the youth rising. And then at the end, and you'll have to listen to it for yourself, he names the Asian country that he reckons has the most potential right now. In terms of corporate stories, there were a few little ones around today. So one of which was Alcoa, not on your screen just now, but you know that it's dual listed after Alcoa took over Alumina here. And its share price up by close to 6% after we learned that it would sell a 25% interest in a Saudi Arabian company for billions. We're talking $1.6 billion. Mineral Resources, it was trading positive today. It had a broker upgrade coming from Macquarie. Also some news about its maiden resources in the Perth Basin gas area. However, just turning negative to end the session, down by 0.3%. Emerald Resources stuck by guidance despite a minor wall slip at a gold mine in Cambodia. So it wasn't uniform, as I said, across the sort of gold exposures. Lendlease selling its East Coast construction business in the United States. So again, another sign that it is shrinking. Whether or not it's to greatness, of course, the jury is still out, but today had a positive impact on its share price. And Austal won a $671 million contract from a boat entity in the United States, and it was to support the U.S. submarine industrial base. So shares are up by 20% today. That was the stock of the day. I'm going to keep you waiting for that for just a bit, because I would like to get to some market analysis with Josh Gilbert, who's joining us from eToro. Hey Josh, good afternoon to you. All right, market performance, what do you make of it?
Yeah, hey Nadine, good afternoon as well. Yeah, positive start to the week. I think you touched on it at the top of the episode, nearing in for a record close there for the ASX. Last time I sort of checked in there, financials sort of leading us higher, coming in from what was a strong week on US markets, and sort of a completely different week to the week we had prior to that, where the S&P 500 lost 4%, and then this week we'd made that pretty much all back. So a strong week all in all last week, and I think that's led us into this week. I do think, though, we might see this week turn a little bit quiet in terms of market moves. We're not going to certainly get, in my view, maybe that 4 or 5% move, unless we sort of see something really significant from the Fed that we're not sort of expecting, which really for the moment could potentially still be on the cards. But I think in terms of the week that we have coming up, I think we might see investors take a little bit of risk off the table. We might see a bit of risk off sentiment prevail, I think, going into Thursday. So I think the next couple of days might be a little bit quiet. And I think we maybe saw a little bit of that today on the ASX, with those early gains sort of fading out a little bit towards the end of the session.
Mm-hmm. All right, US dollar, how's it working ahead of the FOMC? That's going to be a real barometer of sentiment up until then, correct?
Yeah, absolutely. I mean, dropped a little bit today, obviously after that sort of Trump news as well, early this morning. So a little bit of weakness there. But yeah, again, that's going to be a big driver of obviously what the markets are sort of looking at. And when we look to the FOMC, and interestingly, just having a sort of a look at market pricing before sort of jumping on with you today, markets are now actually seeing a 50% chance of, a 50 basis point move is now sort of priced in at around about 59%. That's pretty significant. Last week we were only seeing about a 30% chance. So, it's quite hard to sort of really put that down to anything, to be honest. I think the inflation data that we had last week, I think probably worked in the favor of maybe that 25 basis point move. But to see that sort of early shift in pricing is pretty significant. And I think it's significant in the fact that if that doesn't change, which, look, let's be honest, it definitely will change, I think, as the week goes on. But if it doesn't move back towards that 25 basis points at all, well, the Fed has done everything that the market is priced in for the last 14 years at every single meeting. So if it goes into that meeting pricing in a 50 basis point cut, then there's a very, very good chance that we're going to get that. And I think from what we've seen over the last couple of weeks and especially what markets are looking at, I'm not sure the 50 basis point cut is what the market is going to be looking for.
Yeah, I was going to ask what we can put that down to, but I've yet to get a really clear sort of explanation myself as well. So we're just going to have to wait and see, I think, on that front. What's crypto doing in the lead up to this? I'd be curious to know.
Yeah, we had a bit of a nice bounce over the weekend, actually. We moved above about $60,000. It's, again, sort of not really had the rally back from when we sort of sold off on the Japanese carry trade. Again, that was sort of one of the risk assets that really got hit pretty hard after that time. A decent move over the weekend, but again, sort of retreated a little bit today. Sort of has been really stuck in the doldrums. I think it's fair to say that. Again, it has really failed to sort of move a little bit higher. I think that risk side of it is focused quite heavily on sort of recession fears, and again, Trump's expectation of obviously winning this election has shifted pretty significantly as well. There was a strong, long period there, especially when Biden sort of moved out of the race, that it was, markets were basically pricing in that Trump was going to sort of get it. But a couple of months is a very long time in politics, and that's obviously changed quite significantly. So we obviously know he's pretty pro crypto, but we also know that, September is always is the worst month for crypto assets. So, often I think what we'll see is that if we do get that weakness in September, I don't think we'll see, any hesitancy from investors to sort of looking to sort of buy that up over that time, because October and November are actually the best month on average for Bitcoin in terms of returns as well. So I think there'll be a fair bit of weight behind the view of any weakness coming in September will be bought heading into sort of Q4, but really struggling to find its footing. If we do get that 25 basis point cut, I think it will be a strong tailwind for crypto assets. And as those cuts continue to come through, I think we'll also see that translated in crypto assets as well.
Yeah, okay. When it's such a macro heavy week that it's kind of difficult to talk about stock specifics. So maybe you could just tell me what seems to resonate on the eToro platform, like with all of this enthusiasm around gold and the record heights that the spot price is achieving, are your traders, are your investors allocating to gold via the platform?
Yeah, look, we're definitely seeing the retail interest for gold sort of coming back. I guess there's always a nice split when we talk about sort of maybe crypto assets and that we spoke about there, and then gold. And there's certainly a shift in terms of the demographic of users that obviously look to buy gold and look to buy crypto, and obviously the younger generation obviously tend to move towards the crypto assets, and the older generation obviously sort of stick towards gold a little bit more. But I certainly think we're seeing a larger interest at the moment on gold for a couple of reasons, and obviously one, because we're at record highs. We're obviously seeing a weaker US dollar. We've got those Fed rate cuts. Central bank buying has obviously been at record levels for a long period. Obviously got a lot of geopolitical tension sort of rising in, and then throw in the actual political tension side of it as well. It makes for a great mix, I think, at the moment for gold, and its performance. It's this year as well, completely stands out in the commodity space. So we're definitely seeing interest in it at the moment, given we have a massive end to the year with obviously central banks cutting interest rates, and then obviously the political side of it. So we are certainly seeing that, but also at the same time we're not seeing investors deviate away from tech. We're sort of really seeing them stick with that, and I think that can also come back to this view that a macro soft landing is, or a macro base view of a soft landing is absolutely still possible, and that the Fed has so far engineered that pretty well, and that they can afford to cut by 25 basis point this week and continue to sort of move in the direction they want to do, and that would then support a strong end of year for equities and ultimately tech as well. So we're not seeing them deviate from that, which is pretty interesting, but also taking a little bit of a hedge, if you like, to sort of allocate towards gold and some of those other commodities.
Got it. Josh, always nice to catch up on a Monday. Really appreciate your time.
Pleasure. Thanks for having me, Nadine.
Josh Gilbert there joining us from eToro. I'm keen to get you across what was the stock of the day, being Austal. Really kicked it out of the ballpark in terms of percentage point change. David Lane from Ward Burnett and Kai Chen from MPC Markets. Let's take a listen.
If you're looking for a long-term exposure to that defence spending, and defence spending is going up significantly around the world, Austal will be a beneficiary of that. The challenge, though, is can they do it profitably? So at the moment, they're trading on a PE ratio of around 55 times. They have turned around from a loss in financial year 23 and have done a lot of work to improve their focus on profitability. So a lot of the forecasts from management are that 26, 28, they will be significantly more profitable. They're focused on return on investment.
I think Austal, it's slow and steady. If it can deliver, it's a solid stock to hold. That's what I would look at it
But
for.
in the defence space, you'd prefer Drone Shield?
Oh, that one's very forward-looking and sentiment-driven,
Right.
But it definitely has more growth potential.
Right.
Yeah.
Okay.
So there you go. It's a hold for Austal, not a ringing endorsement to go out and buy today. Those are the rules of that stock of the day. We ask our expert guests on the call, which is live at 12 noon each and every weekday on ausbiz.com.au, what companies they would buy, hold, or sell on the day. All right, let's get to some of the market leaders today, that being Alcoa. Sorry, our data is just catching up with the change in name. It was up by about 6% on news of that asset sale. Domain, can't see any news associated with it, but it's pushed higher. Evolution has announced its AGM. But other than that, it's the gold price really driving that one. Zipco's been a market darling as of late, hasn't it? And Sigma, no news that I can see there. And Lend-Lease, we covered that already, up by 2.25% as it sold that U.S. East Coast construction business. Let's get to some of the laggards in the big end of the market. And always keep in mind, this is by percentage change, so this is not market cap. Telix Pharmaceuticals, one of the worst performers. Emerald, which was in the news, that's higher all-in sustaining costs, it said, will be offset in the future by a reduction in its earth-moving costs, in case you're wondering. And the other companies on your list, no real news that I can see associated with that. And in the small to medium end of the market, here we go. Let's see what catches our interest. 3P Learning up by 12%. Flipping the page, and one of the worst performers, if not the worst performer, was Northern Minerals. It was off by 16%. So what's on overnight? Not a whole lot. So there's not top tier data that will really drive markets ahead of some of those big central bank decisions. But we do have the New York Empire Manufacturing Index. It is a pretty useful leading indicator for the broader ISM manufacturing gauge. And we do get a few other regional Fed manufacturing surveys later this month, but unlikely, I'd say, to be market moving. Look, here locally, tomorrow, we've got a few companies trading ex-dividend. Of course, you never know what the session will bring, but there's no, again, top tier economic data on the agenda. Although, don't forget, we're working toward Thursday when we do have that Aussie jobs read. And of course, it's really important for the RBA when it comes to interest rate decision. I mean, inflation, yes, but really it's the jobs, because they're trying to achieve this soft landing, that narrow path to the soft landing of keeping inflation in check, seeing disinflationary pulse continuing, and keeping the jobs market quite strong. CBA, for one, is expecting to see employment, about 20,000 jobs added in the month of August. Unchanged participation rate in CBA's view would see the unemployment rate lift to 4.3%. If that happens, CBA will stick by its anticipation for an interest rate cut later this year. Wouldn't that be great for everybody who's got a mortgage out there? Although there's a lot of water to go under the bridge between now and then. Listen, we've got analysis on everything we've discussed in this program, in the podcast, easily available, ausbiz.com.au. While you're there, if you would consider becoming a contributor, you can do so. Just look for a button on the top right of the screen. We love bringing you all of this information on markets daily, all the insights into opportunities in the Australian market and beyond, but a little bit of help wouldn't go amiss. All right, here's the final figures for this local market. Not quite record-breaking, but a positive session, not to take anything away from it. We've got the S&P ASX 200 sitting up by 0.25%. Bang on what we saw with the CIBO Australia Index, which is on your screen. 8,121 is the final figure for the S&P ASX 200. So we will be digesting that attempted assassination attempt, we're told, for the former US President Donald Trump, and how that impacts sentiment, if at all. It's really all about global growth. It's all about interest rate outlooks, as we mentioned, in many countries this week, particularly the FOMC. So we're seeing the dollar pretty subdued as this market continues to, put its weight behind a 50 basis point cut come Thursday. We will see. Look, you can catch up with all you missed today, ausbiz.com.au. We'll see you when we're live tomorrow, 9:45 a.m.